What's going on, guys? What's going on, Hamid? What a boring day, I'm not gonna lie. It was definitely a boring day. And I do have a little bit of bad news. I mean, not that it's bad news necessarily, but I mean, just to give maybe a heads up, I want to say. But those of you that probably didn't hear on live, we do have CPI data that's coming out on Friday, right? Thursday we have the jobless claims as normal. Friday's going to be that crucial CPI data, and that's why you relatively saw low volume today to pretty much kick off the week. And it looks like it's in anticipation of CPI data coming out. So I'm not too fond of what the price action was today. And what my fear is that volume is gonna likely remain low this week until we get data, and we're likely gonna end up seeing a little bit more of chop to continue the week. What's going on, Jason? So that's why I just pretty much wanted to point out, basically what I've identified here, just kind of looking at the 45-minute chart here on SPY. I do have an anchor view up sitting from the low that we put in from May 20th. My anchored view up, from which most of you should know, just sitting out from our most recent high, roughly back from the end of March here. So I'm kind of sandwiched in between both of those anchors view ups from your most recent low to your most recent high that we had, the most recent peak. And then you have a nice little ascending channel action, if you want to say that, that we have going on in SPY. So what actually is my concern is that we can end up chopping within this ascending triangle until CPI data comes out on Friday. And that would probably be the worst thing for traders like ourselves because you definitely do not want to be stuck in a box. So that was pretty much my biggest concern of what I was kind of identifying towards the end of the day, in which we also obviously we didn't see that kind of drastic move to the end of the day. That kind of gave me a reaction where there's still volatility that's kind of giving us an indication of a market direction. You want to say there's no really direction that we got into the close of today. Everything just feels like it's just neutral, and we can't even say whether it's bullish to bearish. But what it seems like right now is that they're gonna stick us within this triangle until we get either the pop up until the anchored view up above at that 419.5, or we end up breaking down off of CPI data, and I'm gonna be targeting that anchored view up off of our lows down at 404 low. So that's basically the two scenarios that I'm looking at. Other than that, I do truly want to see. I would prefer that we end up just breaking down on the ascending triangle right now. We get the break under 410 that I know that Avery was pretty much watching. I believe that was the same level he was looking to pretty much flush under. We break under this 410 on this trend line support of this ascending triangle, and we can start to trend down towards that anchor view up below before the CPI data, in which case we're pretty much pricing in all that the bad data that's going to be coming out on Friday in anticipation of it. And then who knows if the data ends up coming in line, then we move north off of that anchor view up, and that 404 pretty much acts as our higher low. That's kind of one scenario. Otherwise, the other scenario is that again they keep us in the triangle and they wait to break us north above this 416 half, and then we'll test an anchor view up above. So those are just pretty much the two scenarios that I'm watching. All right. Of course, once we end up breaking this 419 half, I still have us going to 426. That still was my target. Kind of still remains the level that I'm watching for the upside. But that seems like it's pretty much down the road here right now as we get stuck in a box. Jason, Vic seems pretty cheap here. Think it's due for a bounce. That's where I was actually leaning to the fact that if we end up breaking down on this ascending triangle, it kind of makes sense that maybe we end up pricing in that CPI data from Friday, that we price it in ahead of time going through this week, and we can end up trading down towards that anchor view up I have at 404. That makes a little bit more logic, and especially how cheap the VIX is right now at this 25 level, and makes sense that that probably makes it push towards that 28 level, 26, 28 level, and we get a breakdown on this ascending triangle. That would be the ideal scenario that I'm watching, but that's where it's a little bit more dicey because if the VIX breaks down here convincingly under this 25, we can take this right down to 23, and that allows you room up into the resistance of this ascending triangle at that 416 half. So that's the flip side of that. But yes, I mean to say that the VIX is cheap relatively, yes it is. But I can end up seeing this coming down if we crack that 25, we'll come down to likely about 23. All right. So that's pretty much just watching SPY. That's just the gist of what I'm looking at. Again, biggest fear is we just get stuck in this triangle, and that's probably the worst thing that we want to see right now. The other thing that kind of caught my attention right now was also shop. Shop was one that I was kind of watching here going on. A nice little wedge action that we have. Obviously, you need the market to cooperate, which is why I wouldn't swing a position like this. But I do want to see this kind of break over this 369 level. If we can crack over 369 tomorrow and market conditions are ideal tomorrow, I do think that 400 calls are going to do some work here, and we'll be targeting that gap fill overall to the upside here. That's above the price point, above 385 half is what we're looking at to enter that gap fill, and 400 calls would be the ideal scenario here, basically right up into that resistance. All right, so that's one that I'm watching is shop. The other one that I kind of had my eyes on was Boeing. This is another one that I had my eyes on. I had it on early on. I think Avery might have taken a position on this one. I was calling it out, but I just remain to keep watching it. It has a nice little diamond top action, so if we end up breaking down on SPY, this will be what I'll be watching for. We end up breaking down below 138. That's going to be where you pretty much take this down. And I think the intermediate level that I was pretty much targeting this off of was pretty much right around 130 half, 135 half is what I'm looking at for my first PT. And then, of course, you can see the gap fill that you have below. If the market really does flush, this enters gap fill below at 131.87. And that'll be a pretty large move, in which it's about roughly $8 move that you're looking at to the downside. So a pretty large move if SPY decides it wants to dump. All right. Interested in your Rivian chart. I'm up about 100% on puts, held a few overnight. I have not looked at Rivian in quite a while, but I'll take a peep at it for you. Let me see. First, let me actually see the daily because I haven't looked at this in quite a while to see what we're looking at. One thing that kind of gets my attention just a little bit, and this may be a stretch a little bit earlier on, but you might be flirting with a little bit of a inverted head and shoulders action. If this can curl up here, that's pretty much what I would end up seeing happening. It's an inverted head and shoulders. But obviously, you see you have a little bit more downside potentially. I think your major support that you're likely watching here is right around this 27 high. So you have about maybe about $1 and some change to the downside here. I want to say close enough to $2, in which you end up reaching some major support. So 27 high would be where my support levels that I'm watching. Above the level that you want to see this to pretty much break out of would be right around here is what you're looking at breaking out of. So if you get a break over this 32 mark, that'll pretty much be where you get that, I want to say, quote unquote neckline break of this inverted potential inverted head and shoulders. 32 would be your full on break. Otherwise, if you're just kind of trying to play for the bounce here, as you say you're up 100%, I would look for this move up here towards 30.77, 30.77, and that may end up acting as a little bit of a short term resistance on this. All right. Christian, you're in July 22nd. IWM puts thoughts on this. First thing is, I do like the expiration that you got on the IWM. July 22nd is an ideal expiration. The only cause that I would have about that, and this is where you're gonna have to maybe end up holding through a little bit of pain, is if the market wants to pump again. We're pretty much sitting at support, trendline support of SPY, and which we can end up pushing up towards that 416, like you just kind of saw me put up on the screen there for SPY. You may end up having a little bit more upside here along with IWM. So resistance that I would pretty much look for would be right around this 192.80. 192.80 spot is what I would be looking at. And the reason why I ended up coming up with that spot is because if you actually look at your level of support to resistance level, if you actually notice, you pretty much anchored off of that level back from February 23rd. That seems to be a relative support level. You had a nice reversal off of that same mark off of March 14th, and you pretty much broke down off of that level. March 22nd, retested right around that level before you made a low. So you're pretty much your risk would be this going up towards 192.80 is where I would say ideally that ballpark number. 192.80 is your upside in which you would have to stomach a potential loss on it. And then, but given the fact that you have a larger, a farther out expiration, you can hold that potentially through OPEX and further out. It just depends on your stop loss that you're pretty much favoring. If you're trying to do a 30% stop loss on that, holding that IWM, That would be my major concern for you is I would say try to obey it because then you may end up being at a greater than 30% stop loss if you end up having to hold up until 192.80. All right. So hopefully that kind of answered that, Christian. I would assume that. Follow the clouds. I'm a bit heavy on this, but not so far out of the money. I'm assuming you're by the clouds, you're kind of referring to the flow alerts, right? I think that's what you're referring to in terms of that. I believe I saw that came out. Let me see if I can actually double check it real quick. I could probably take a look at it. Let me see what it was that actually came out. All right, so you followed the $2 million order. That was the 175 puts that came in for July 15th for 2 mil. So again, this is where I've seen scenarios where these flow alerts, especially those with such large premium, they're not really caring about the short term effect. Like maybe you would end up carrying tomorrow if you were down 30%. That's where I say like you have to be a little bit more cautious. Do I ultimately think that's going to end up paying out? Yes, I do. But just given your fact of where your level of resistance is, where your room to upside is, again, that was that 192.80 spot. And that's what I'll be watching. That's kind of where I see that you're gonna have to stomach a little bit of pain before you end up capitalizing, and that should end up paying out beautifully by that expiration. So the biggest point is the expiration, but you're gonna have to stomach a little bit of loss between maybe the next few days if we get any kind of upside ahead of leaning into the CPI data. All right. And that's what I would pretty much hopefully say for you. But that's basically what I'll be watching. Otherwise, you're looking for your breakdown spot. You're watching for this to flush under 185. All right. So that kind of gives you both sides of that scenario. Sid, Cedric, when Clouders will be back. Since I'm hoping to get that back very soon, you have no idea. The only thing is that we are trying to make some changes on it, hopefully to pretty much mitigate maybe the losses that we've had over the period of time here in the past few weeks. So that's something that we're going to be working on. To say that I have a time frame just yet, I'll be honest with you, I don't have a time frame just yet. It all depends because this is a process because we do have to work through each individual ticker to get the clouds, to where we want it, the parameters we want it, the win rate we want it. So it takes a little bit of time individually. So we will start rolling them back out. Once we do, it will be one ticker at a time that they start to roll back out. The only thing is that we're trying to mitigate that risk again, and hopefully, I want to say within the next few weeks here we can get that out at the latest. But don't quote me. I mean, it's tough to say right now because again, it takes extensive time to get that individually done and to where we want it. All right. Thoughts on Amazon? I got in on stocks at 124, so you got into shares aesthetic. I'm assuming that's what you just meant by that, which sounds just about right. Here's I don't want to say that you pretty much got a bad entry on that Amazon play because I think that you did the right thing by first buying shares. That's ideally the first thing. So, in that interpretation of buying shares, I'm assuming that you're pretty much buying that for the long haul. You're buying that for the long term, basically, and that you're not caring about basically the next few weeks to maybe I want to say a month or two out, right? Because I think you've heard us from most of us in chat, most of us has pretty much talked on YouTube Live here, probably including Tom as well, is that we pretty much see about another leg or two down at least in the overall market. So what would that imply is that Amazon will likely see a little bit more downside here within the next few weeks to few months, maybe that be the case. So, but the fact that you're in shares, you're looking for a longer term gain. I think you're gonna be fine. The only thing is that I would say, and this is what you pretty much having going for you, is that you basically had a beautiful reversal off of this spot, which pretty much acted as your resistance for the most of between September 2018 up until your breakout point of April 20th here. So that's what I do like about that. You had a beautiful spot right here. Now, if I was looking for your resistance, in which maybe you're looking for a short-term gain, that would probably be the flip side of answering your question. What I would say is that you're looking at this up and towards 135. If we get some further upside here, 135 low would be your potential target because as you see right now, that was a pretty pivotal level in continuation of your breakout from June of 2020, and that was also a support level that you bounced off of from earlier this year in January. So that 135 level, roughly about what is that, a near $11 upside. If the market wants to continue going up, you're looking to take profits at 135 if you want that short-term gain. Otherwise, obviously I said if you're holding for the long term, you're basically, be aware of the fact that you have about another leg or two down. That's pretty good. Maybe end up being steep or not, but it's going to put you at a loss basically if you're holding that for the long term. All right. In which case, I wouldn't even look at that position for the next month or two if you're holding that for the long term. All right. What's going on, Lobo? But other than that, you said watch Tom's analysis from yesterday's class. Oh, cause I'm assuming Tom talked about Amazon and Apple. Yeah, Tom's usually spot on. I know that he usually goes out to the larger time frame. He goes out with pretty much the fib fans, the circles, everything he goes out to. Everything to give him a confirmation, he does that on point. So I definitely would say pretty much if he had analyzed Amazon and Apple yesterday, I would definitely go back to review his analysis on that. But other than that, pretty much like I said, I was watching Shop. That was earlier on. I was watching Tesla's one, kind of in a little bit of a funky spot. We had a little bit of an intraday head and shoulders action that looked like it was gonna play out, but that's still left to be seen. I think the broader market is the one that's going to be kind of determining that. I dropped that in ideas, pretty much watching to see if this pretty much gets a break under 706, and we could take this down to 696. Below the 696 spot, then I'm basically watching this down towards 670 is what I was watching, is the bigger level that I'm watching overall. But then the other flip side of that is that you do have a nice little gap fill above. So if we end up invalidating this head and shoulders, then I'm basically watching for this to pretty much make a move over the 726. Over 726, then we'll test gap fill at 743, and we have a completion gap fill. My overall PT that I had on the upside was I want to say it's limited, but 756 was my overall PT that I had on Tesla. So if we do get that upside movement, like I was pretty much showing you on SPY, that we could likely even go up towards 416 on that ascending triangle action that we had, right? We can push up towards 416 half on this ascending triangle. That kind of will coincide with Tesla getting that, I want to say, what, $30, $40 price action up to my target of 456. All right. So that's another one that I have kind of on that watch list. I already mentioned Boeing, watching that diamond top kind of that you have building here, wick the top, wick the bottom, and you're just wedging left and right. I'm going to look to see if we break down under that 138 low. Other than that, we also do have AMD also still has their event coming up. I'm gonna watch to see if we get any kind of further continuation on AMD here, watching over 106.81, and then we could potentially look to see if we take out the highs of basically between today's price action and also on Fridays, on the second that is, which I believe is was on Friday. Nope, take that back. That was Thursday. All right. So 109 will be the big breakout there, and hopefully we can start to push. And I do have a little bit of a resistance sitting at 114 if we can get that breakout. All right. But kind of keeping it very simple right now. I don't like the market price action. I think everyone probably agree with today's price action. It was not ideal. A lot of it was pretty much just getting 10, 20% gains, unless you absolutely sniped the bottom or the top and you had convinced pretty much confidence in your play, or maybe emotions maybe played a factor, which was pretty much tough, then you ended up getting what maybe 50 to 100% gains. But very tough day overall. I think that it's going to be a little bit more skeptic in the coming days here until we get to Friday. We get that CPI data. Just be cautious and keep your position small. That way you don't get chopped up here and you don't get your premiums just eaten alive. All right. So hopefully you kind of maybe learned that today. If you didn't learn that today, I'm giving you that heads up so that when you come tomorrow or come Wednesday, that market's just going sideways or is trading within a range, don't be shocked. All right. But I kind of will say, I know relatively a quiet day. I'll leave it at that then. I think I covered, some names that are on my watch list. Hopefully, just covered the names that you guys wanted to see there. I know that Sing and Dapper are gonna have their class here just shortly, so take a breather, step into their chat. They should be starting here just shortly. But other than that, I will see you guys on live tomorrow morning, and I'll call it a wrap here. Appreciate you guys joining.